What is Twitter failing to do at this stage of its life when, it comes in a week where clearly its rivals are doing incredibly well?
I'm not a public markets investor, so I'm not sure that I'm always going to have the best insight into, the recent Twitter stock move. Because as venture investors, we really take a very long-term perspective, a 7 to 10 year time horizon. And on that basis, I think it seems as though perhaps investors were a little bit disappointed with the user growth being at the low end of expectations for Twitter. I think maybe the larger issue was that the revenue guidance was low. But, as a VC, I would just take a long view versus a quarterly view. And on the whole, I'm pretty encouraged by the recent announcements that they've made on product, including the paid subscriptions that they've been talking about, the newsletters, the audio spaces, all of which I think is going to drive a lot more engagement. And I think potentially an expansion beyond advertising towards new revenue streams. And that's a trend that we've seen a lot of startups, which is more in my world, moving towards in the media business. So subscriptions, direct payments, whether it's to influencers or, to companies, because people just seem to be more willing to pay for content. And so you see that with, The Athletic, Substack, Patreon, Twitch, Fourth Wall, the rise of merch as a business model for creators. It's all supporting that. It's all in that direction.
Yeah, Jeremy, it's Morgan. I mean, you sort of just hit on my question to you, which was going to be whether it's Twitter or it's whether some of the other more established social media names that are already out there in the marketplace. I mean, it wasn't that long ago. I feel like it was just a year or two ago that we were talking about the fact that there was no competition and that new companies were going to have to focus on other areas to really make a dent. And yet here we are having this conversation this afternoon about all this new generation, if you will, of social companies that do seem to be starting to pull some eyeballs and some attention away from the likes of Twitter and Facebook, et cetera.
Yeah, there's people have been saying social is dead for a really long time, and yet there seem to constantly be these new social things popping up. And people said social is dead, and then TikTok came along, and people said social is dead, and then now we've seen Clubhouse starting to take a lot of attention. And then in that whole time, I mean, you look at even Twitter. I mean, its stock is up 2x in the last year. Snapchat's up 3x in the last year. And so even with these new companies coming along, I think you're finding that even the big companies are still holding up pretty well.
Where do you stand on the pace of SPACs that we're likely to see for the next year or so, and or IPOs? And do you think of them kind of as one and the same? And either way, presumably, you don't think the pace of last quarter can continue.
Well, Wolf, I think you hit on a great point, which is that the window is open, clearly, for companies to get public, and there are a lot of different ways they can get public. And we've seen, a lot of very successful IPOs happening. Over the last couple of quarters, we've seen some direct listings, Coinbase notably, relatively recently, and then we've seen all these SPACs, and they're all, I think, different tactics towards the broader opportunity to be a public company. And we've seen a lot of companies that have grown as private companies to really substantial scale and a lot of value creation over the course of the last 5-8 years. So it's actually terrific to see so many of them being able to become public, and so that a broader set of investors now gets the chance to invest in them.
Yeah, speaking of.
Shepard Smith here. Thanks for watching CNBC on YouTube.